What's going on, traders? It's Mike from CapitalHillFX, and in this video, we're going to be recapping the last month of trading the foreign exchange market. And I called all of these trades live time with my premium members, and I made sure to track them in this trading journal. So every single trade that I called out live with my premium members is now tracked on this trading journal. And we're just going to go over some top winners and top losers of the whole entire month, just to see if we could derive some type of lesson from every single trade that we placed. And that's just sort of a reference what you should be doing in your trading journey, making sure that you're tracking every single trade so that you're learning from every mistake and you're capitalizing on the strengths that you display in the markets. So to start off, let's jump into this trading journal, right? So to start off the year of 2023, the month of January, we yielded 10.85%. And we can see this right here. Our net P&L is 10.85%. And these are all the trades that I placed for the month of January. I think around, let's see, around 20 trades, it looks like 19 or 20 trades. So that comes out to be around 4 or 5 trades per week. Just to get a good idea of the frequency in which I trade, it's around 4 to 5 trades per week because a lot of people ask me. So considering I'm a hybrid between an intraday / swing trader, that means that I don't trade as often on a day-to-day basis, and I just have quality trades, not quantity of trades. So let's dip into the winners first, just so that we're actually seeing what we want to see in an ideal trading setup. And again, we're going to go through these trading setups as a sample of what we want to keep executing on, because these are winning trades. So we want to sort of optimize what we're winning and do less of what's losing. So first, we're going to look into the winners. The first one is a 12-hour time frame. So I'm going to show the higher time frames, and then I'm going to show the execution time frame, and then I'm going to show the time frame that we exited the position on. And this is the USD Canadian dollar currency pair, starting off on the 12-hour time frame. And what are some things that we can notice? We can notice that we bounced into a significant daily level, and I did this on the 12-hour time frame just to see the level a little bit better. But we can see this is a daily resistance level where price has reacted with in the past. Clear intent with direction, reacted multiple times around this level, and trading took place pretty recently around here, right? More the middle and the beginning of December, and it looks like we were trading another bounce in the middle of January. So this just looks like a very sound daily resistance level that price has respected in the past, and it looks like price is failing to close past the zone. So we're going to look on our execution time frame, which is the hourly time frame. And the first thing that I noticed right off of the bat is look at all of these rejection wicks around this significant horizontal level, right? We can see we have tons of rejection, price trying to wipe out the previous highs, but we can see we're just left with these wicks, which is giving us a good indication that price is having a difficult time actually wiping out those previous highs, and sellers are in store. Remember, when you are analyzing price action, there are 4 major things that you want to analyze. Are we bullish or bearish? Pretty much just asking, is the close price above or below the open price? And you could basically identify this, is the candle green or red? The second thing, the position of the real body. If we're looking for bear candles, and we would be in this instance because this is around a significant daily resistance level, so we're only trying to look for that bearish price action, we want the position of the real body to be near the bottom of the candle. Now, if we're getting the closures of the real body near the top of the candle, that's giving us a good indication that there's not as many sellers that we want in store to sell around a significant resistance level. So make sure you know where the position of the real body is and how strong that real body is, right? What's the size of that real body? Are we presenting small little real bodies, giving us a good indication that the strength of that sentiment isn't too strong? Or we have large real bodies, sort of like this candle right here, when we first initially tested this zone and we were presented this very strong real body. And this is a very good lesson, because when we actually first tested this zone and we had this strong bearish candle towards the downside, a lot of traders may have said to themselves, wow, I need to enter this trade right now because we just presented a very strong bearish candle away from a significant daily resistance level. The problem with this entry is we do not chase waterfalls. This would be chasing waterfalls if we had our entry right at the end of this candle closure and then our stop loss maybe just above these previous wicks, because then what ended up happening, price came back into the zone, tested multiple times, showed multiple wicks, which is just testing the zone, and we may have gotten stopped out or our hedge order activated if we had the entry down here in the hedge or the stop loss right above the wicks. So that's why it's very important to not chase waterfalls. Make sure if we do have an impulsive move away from the zone and it would trigger a bad entry, make sure you're waiting for price to retrace back to that zone and actually present more bearish price action before entering a sell. Just because a lot of times, even if you're entering after an impulsive candle, a lot of times price does retrace back to the zone and sort of consolidate before actually heading back in that initial direction. So it's very important to set the emotions and hopes aside and just trade objectively whatever's on the chart. So We presented a lot of wicks, and we could see what actually triggered the entry was this strong real body, right? We had a very nice bear candle with a nice strong real body, and the position of the real body closed near the bottom of the candle. So we entered after this hourly candle, and then we could see what ended up panning out. We actually profited 120 pips on this trade. I just targeted a previous hourly or 4-hour structural support zone, and I ended up taking profit once I saw a lot of bullish price action around this zone. So this was a nice winner for, I believe, let's see, USD CAD, around 2.5%. So a very good winner on USD Canadian dollar. Let's jump to the next trade order, which is Aussie US dollar. Okay, so AUD USD. So we can see on the daily time frame, we just have a significant daily resistance level. If you see something in common, it's because it's so simple. I'm just trading bounces off of daily horizontal levels. I outline significant daily zones, and I just wait for price to come to them. It's as simple as that. Buying at support, selling at resistance. Probably should have mentioned that before, but who cares? We'll mention it now. So we can see we just had a significant push into a daily level. We've had significant rejection around this level in the past, in the beginning of December, back in September of last year, but just multiple rejections, clear intent with direction, and recent trading taking place around this zone. So we're going to scope down to the hourly time frame and see the price action that was showing. And you can see we have little identifiers. I don't like to call these indicators because people cling on to indicators of like, what's the indicator? What's the indicator? This is just an identifier showing what the price action is developing on the markets or on the charts. So we could see that we had a bunch of wicks when we first came and tested this zone. We had a very small bearish bounce, but then we came back and tested this level again. Can't you notice that both of these trading setups, I could just notice right off the bat, this AUD USD and this USD Canadian dollar, we had multiple tests of the zone. We could see we tested this zone multiple times before actually rejecting towards the downside. And then when we see AUD USD, we could see that we tested this level multiple times, showing wicks and bearish candle closures, that we were testing the zone, validating, trying to wipe out the previous highs, but price just keeps putting in wicks and bearish candle closures, giving us more of a valid trading setup and entry towards the downside. It's giving us better indication that price is actually going to respect here as resistance. So we could see that we presented not only a long upper shadow, which is just basically saying a bearish wick. Again, analyzing the price action. Top heavy wicks. Position of the real body closing near the bottom of the candle, right? Even though the size of the real body is very small, it's giving us a good indication that sellers are present because of the top heavy wick and sort of the position of the real body. And then what ends up happening? We try to wipe out the previous highs, put in another bearish candle, bearish impulsive candle, come back, test the previous highs. We're left with another wick and another very nice bearish engulfing candle. This is what ended up triggering the entry. A little bit more risky because we do have a wick on the bottom half of the candle, but we still had this very nice real body showing us that there's that strength of sellers. And then we ended up taking profit. This was probably, we could see like near a 130 pip move, just doing quick math with the entry and the take profit. This was at around 130 pip move, which ended up yielding around 2.2% of my account balance. And again, I called all of these trades live time. So a lot of people may not be used to like people actually trading live right in front of your face, but I do that every single day with my premium members. I could actually go into my Discord really quickly. This is the premium analysis where I'm calling out all of my trade orders. See something like this, AD JPY buy order. I update all of my trade orders. I'm never just like calling out orders that I don't update, right? Just different exclusive setups in this chat and everything like that. So always updating my trade orders just like this, even if I'm not even if I'm not like in profit, even if I'm in drawdown, I will always be updating the premium analysis, but this is just for my premium members. We also have a premium chat, a live trading journal. So this is the premium chat that we're constantly just hitting TPs. My boy Vic here is absolutely killing gold right now. So we developed a nice trading strategy for him to absolutely kill gold and everything like that. So we have a live trading journal, very transparent. And that's pretty much the journal I'm going over right now. Live recordings of the daily lives. Like there's a lot for my premium members. So definitely check that out if you haven't already. But let's go into the next portion. So the next trading setup, we already saw AUD USD. This was New Zealand dollar JPY, so NZD JPY. And on the daily time, or the 12-hour time frame, excuse me, sort of the most recent candle may seem confusing. And the reason being is because I did not take this screenshot right when I entered. I sort of did a no-no. I did it after the fact. So that's why this candle looks like this. The candle would be more near the bottom where the entry actually was. But we could see on the 12-hour time frame, we just have a super clear daily zone, right? Not like ridiculously clear, but pretty significant as support and resistance in the past. And the resistance in the past was a little shady because we had a nice little pop above the zone and then we came back, tested, and then pushed towards the downside. A lot of people refer to this as a liquidity spike or a stop hunt where price wipes past the zone and then actually comes back test below the zone and then test towards the downside. But we could see for the most part, clear intent with direction, multiple rejections away from this zone, and trading has taken place around this zone very recently. So just a super clear zone. We came up to the zone, even though it was uptrend structure, it looks like we're still having some type of selling sensitivity around this zone. Now let's go to the entry, the actual execution time frame, which is the hourly time frame. We can see that we're just presenting a lot of bearish candle closures. And remember what I said, multiple rejections away from the zone. Look at all the wicks around this significant horizontal level. So just taking away from these winners right off the bat. We're rejecting away from the zone multiple times, right? It's not like we're just coming into the zone and then just having a very strong impulsive candle towards the downside. We're creating wicks around significant horizontal levels. We're testing the level multiple times, trying to wipe out the previous highs, or for a support level, the previous lows. And we're failing every single time. We're just putting in these wicks. And then what ends up getting presented? Multiple bearish candle closures. Position of the body closing near the bottom of the candle, size of the real body very nice, and the wicks near the top of the candles. And we can see right here, we did have a bottom heavy wick, but then it just got treated as another lower high, and then we pushed with another bearish impulsive candle. And this is when I end up triggering an entry, kind of a random candle to trigger an entry, but maybe this is when I was awake. And I end up being like, you know what? I was very confident that price was going to end up heading towards the downside. Not only all these wicks, but we had these nice bearish candles closing near the bottom of the candle with the nice size of the real body, signifying that we might head towards the downside. And then what ended up happening? We ended up dropping towards this previous support zone. I believe this was a 4-hour structural support zone, and we cashed out for 120 pips. So really quickly, I just want to take away some lessons from all of the winners. Multiple rejections away from the zone. Wait for price to form those wicks around significant support and resistance levels, giving us a good idea that there's a lot of instability and indecision around that zone. And you want to see that the buyers or sellers are taking control over that support or resistance level. Huge wicks. Like I said, make sure you're identifying those huge wicks around the significant horizontal levels, and make sure to analyze the price action very, very closely. So now we're going to take a look at the losers. So just as important as the winners is analyzing the losers. So we're going to take a look at a couple different losers within the past trading month. So we can see we just have a super clear, this is a 4-hour zone. So remember, when you're trading off of daily 12-hour zones, you could also trade off of a 4-hour zone. Which may be very prevalent on the 12-hour time frame, but not as prevalent on the daily time frame. So considering I lost this trading setup, I may want to be just closely intact with daily zones instead of the 4-hour, 12-hour zones. Just right off of the bat, we could see that this is a choppier zone. We could see more recently, we broke and retested this zone and tested it as support. And then we came back and tested it as resistance. And I was anticipating another push as resistance, as we could see here. But just a super clear zone on the 4-hour time frame. But I bet if we saw this on the daily, it wouldn't be as clear. So just making that known. So we're going to go to the execution time frame. We could just see we have wicks around this significant horizontal level, tried to test it multiple times, tried to wipe out the previous highs, failed, and we actually formed this nice bearish candle. I actually executed this trade on a live session, I believe, around 9 a.m. And we could see this could be a potential lower high. So there was some confluence with this trade. So the price action wasn't the issue. I think the market structure was the issue. This was a sloppy zone in my subjective opinion, because it was off of the 4-hour time frame, not the 12-hour daily. And we could see what ended up panning out. This is a whole mess of trades because remember, I utilize hedge orders instead of stop losses, but I could quickly run you through it. So I had a hedge order right above these previous wicks. I think it shows it. Oh, it doesn't even show it in this screenshot. Sorry about that. But I pretty much had a hedge order right above these previous wicks where a stop loss would be, saying, okay, if price just wipes up towards the upside, I want to be entered into a buy. I don't want to exit this initial sell. I want to be entered into a buy or a sell. And you're basically just doing this to mitigate risk in the market. So what did I do? I outlined another significant resistance level, and I just waited for price to come up to this resistance level, and I exited this buy hedge in a profit, and I was just waiting for price to bounce towards the downside. But we didn't end up bouncing towards the downside. We put in a new higher low, and we end up making another bullish impulsive move towards the upside, triggering this new buy hedge. I don't want to get too into this trade order, but basically I closed all of these orders right around here, which ended up resulting in about 1.63% loss. We could see it right here. So a little over 1.5% of loss. So that's what could happen with hedge orders. They could help you with your winning percentage, so you won't lose as many trades. But the ones that you do lose, they could be substantially larger than the ones you would lose with a stop loss. So you have to keep that in mind. But we could see off of my trading journal, I've only lost like a handful of trades. And most of them were just like 0.3, 0.4, not even a full percent loss, right? So even the ones that I do lose on, they're very minuscule, and the ones I win on are much more often. So that's why I like this trading system. It just works for me, but find one that works for you. So basically what I get out of this is it was a sloppy zone, and I believe I put that in my trading journal. Sloppy zone, make sure to validate the zones before trading off of them. So that's sort of the lesson that I got out of this trading setup. Make sure that you're just trading off of those significant zones. For me, it's the daily 12-hour. I'm not going to try to trade off of the 4-hour timeframes or the hourly timeframes. This really humbled my timeframes and where I should be analyzing on. So the next trading setup, Euro GBP. So we went off of on Euro GBP. We could see actually this was a super clear 12-hour zone. 12-hour probably could be even clear on the daily time frame, but I use the 12-hour time frame just so it's a little bit more clear and significant. But we could see that we just have a super clear resistance level where price has recently rejected away from in the past. Not too long ago, in the beginning of January, it looks like we did reject away from this zone, and it looks like I was just trying to trade another bounce off of this zone. We could see on the 12-hour time frame, this candle looks beautiful for sells. A top heavy wick, position of the body seems to be closing near the bottom of the candle. This seems to be actually the candle closure on the 12-hour time frame. This just looks like a super clear 12-hour candle that's showing sells towards the downside, right? A lot of selling sensitivity around this significant horizontal level. Let's look at the price action. We can see we push really deep into this zone. And again, these indicators are here showing that we have a tweezer top. So just giving us a good indication that there's some bearish price action or bearish candlestick formation showing selling sensitivity. And after this tweezer top, we actually presented a bearish engulfing. So this just made me a little bit more confident to actually place a sell entry. Now looking at it, it could have been a break and retest of this significant horizontal level, which I believe it ended up being. But one no I could already see off of the bat is we didn't get multiple rejections, right? All that happened was we pushed into the zone and we began to show bearish price action closing towards the downside. This already off the get isn't as significant because we didn't test the level multiple times. We're not really forming a lot of wicks. There's not a lot of indecision. It's just clear push into the zone and then clear price action towards the downside. But this price action could be just a correction from this upside movement. If we scroll back a little bit, I can't really scroll back because it's a screenshot, but we can see on the hourly time frame, we are creating higher highs and higher lows, right? Sort of an uptrend structure. So this could just be a corrective move towards the downside, testing this zone as support. And if we go to the hourly time frame, that's sort of what it was, right? We had an impulsive move towards the upside, activated the buy hedge, and then I ended up letting the buy hedge run, and I ended up closing out right here, I believe, out of all my positions. Again, with buy hedges, there's way more positions, so I believe I had a lot of positions on this Euro GBP. So we can see Euro GBP, I had two different orders that ended up getting in a loss, my sell hedge and my buy hedge, which ended up being around 0.7% loss, and with the buy hedge, 0.8% loss. So again, under 1%, so no big deal, but all of these ended up losing. So it wasn't the worst case scenario because a regular stop out would be 1% for me. So I still mitigated risk to some degree. But yeah, these were all the trade orders. So I hope you gained some type of value from the winners and losers. I'm going to wrap up really quickly all of the winners, what they had, and all of the losers, what they had, and how we could execute more on what works and execute less on what doesn't. So for the winners, I would definitely say, make sure you're waiting for multiple rejections at the level, identifying those wicks around the zone, showing some indecision, and making sure you're validating your zones before you're actually trading off of them. Then when we go into the losers, you want to make sure that you're analyzing correct price action. You want to make sure that you're seeing the position of the real body. If we're trading off of resistance levels, make sure the position of the real bodies are closing near the bottom of the candles. And make sure you're executing on those real bodies being really strong, right? Make sure the size of the real body is really big, just giving us a good indication that there's a strength of sellers or buyers around this zone. And like I said previously, make sure you're validating your zones and you're getting a good idea of how many times we've tested the zone. If we're coming and testing the zone once and then we're showing bearish price action or bullish price action around a support zone, it's not going to be as significant as if we come into the zone multiple times, try to wipe out the previous highs or lows, and we're just forming wicks, and then we're creating bearish or bullish price actions, much more significant trading setups, as we could see from these screenshots. So I hope you got some type of value from this video today. If you haven't already, make sure to check out my premium membership. Like I said, providing so much content and value in that membership on a day-to-day basis, providing my own trade orders. You get 2 hourly long trading sessions per month, one-on-one calls, how I could help you in your trading journey. You're able to have this premium exclusive community chat, premium analysis, which is just giving you access to my own trade orders and exclusive screenshots that I don't provide to the free community, my live trading journal, and of course, you do get these educational PDFs that teach you the foundational education of what you need to know to develop your own trading system. This is Mike from CapitalHillFX. I hope you learned something today, and I'll see you guys in the next one. Cheers.